Show of hands, do you agree with James Bullard in his assessment of what will happen if we hike rates 3.5 to 3.5% by the end of the year? Do you believe that there will be above trend growth and declining unemployment? Raise your hand. Raise your hand. Oh, Stephanie Link, you're the only one. Okay. Why are you so confident?
I like to be a contrarian.
So you looked at all the other guys first and then you raise your hand?
I can't see anybody. I can't see anybody. I'm looking at a camera.
So what's your thinking here?
It goes back to what I said in the beginning. The consumer is 70% of the economy. They have to stay healthy, right? And so and I do believe that they are in strong shape, especially after I heard the bank CEOs tell us all the great information over the last couple of days. That's number one. And it's a big number one. Number two, I do think inflation is kind of in that peakish area right now. And I do think supply chains eventually will improve inflation. That doesn't mean that inflation is going away. Wages and rents are going to stay high and they're more sticky. But I do think it's going to come down. I do think inflation is going to come down from these levels. That will help the consumer who have jobs and have wages and have savings to spend, right? And they are spending. And then I think you also think about GDP. Well, certainly not going to grow 6% like we did last year, but we're probably going to grow about 3 to 4%. And that is because I already thought that back in November, December of last year, that we were going to see slower growth. And that's because you don't have the fiscal and monetary policies in place that we had for the last 2 years. So this year you have less of that. So you're clearly going to slow. You obviously have war issues as well, and that's a problem. We have to see how that all pans out. But I still think add it all up, maybe it's 3% GDP. That is above trend. And that's not a bad situation if you have lower inflation and lower growth, but still above trend growth. That's good for stocks.
Steve, did you get a sense of what the scenario would be that would have Bullard advocating for a 75 basis point hike?
Yeah, he was pretty clear that this was something that he did not want to rule out, not something he wants to do, but something that he might consider if the Fed did a series of rate hikes, of 50 basis point rate hikes, and still did not seem to have control on inflation. He clearly wants to get the Fed up to neutral and says at that point the Fed is not restraining the economy, which is actually true by definition, right? If the Fed gets to a place where that is in fact neutral, which is a kind of unknowable number, the Fed is neutral as to whether or not it's helping the economy grow or holding the economy back. And then we'll see what happens with inflation. And the idea being that if the inflation regime is appreciated, the inflation fighting regime is appreciated by the public and markets. He also points out, Melissa, the markets have done, I think Jim was talking about this earlier, an awful lot of the heavy lifting already. You are not going to get 300 additional basis points of tightening inside the 2-year or the 10-year. There may be another 100, 150 to come, but the bulk of it is already done.
That is a good point.
A bunch of it anyway.
Yeah, certainly the heavy lifting is in the bond market already. Is it in the stock market?
Yeah.
Or is there a disconnect, Jason, in your view?
Yeah, so I think the point I would absolutely make is the Fed absolutely. I mean, there's a credibility story here, so I think they have to front load. At this point, a lot of this is just conversation. It's just talk. It's just a lot of commentary and sound bites. They have to talk about front loading. And I do believe, once, these 2 basis points, these 2 hikes I think we see in May and June happen in likely 50 basis points apiece, which I think are priced into the market, they will be data dependent at that point. Let's see how things evolve. And as Jim shared earlier, I think the market will do a lot of the work and will continue to do so, especially as supply chains ease. So I don't think the Fed's going to be on autopilot. I think they're going to take a step back and see how things develop.